discuss this entire subject a bit further. The general manager of the Hueber Report, Dan Hueber. Dan, thanks for Skyping in here this morning on America's Forum.
Thanks very much for having me.
So, the big news for a lot of us.
Commodities have taken the old adage that maybe the best cure for low prices is low prices, and have allowed this drop to continue to slide and slide, and trying to force some of the lower cost or the higher cost producers out of the market. Probably being successful in that. I don't think it's going to necessarily impact U.S. production that much, but some of the nations where the wells are getting a little more difficult to pump oil from has certainly impacted them. So, sure we could maybe make a dip down towards the $50 a barrel mark. I really don't think we're going to see crude oil much lower than that. So we've probably seen a good 90% of the drop here already happen.
Chris, on the flip side, relief at the pump means hard times for farmers who grow corn for ethanol. The price of corn has also plummeted as ethanol plants are cutting the amount they'll pay for the crop. What does this mean, in your opinion, for big corn producers?
Well, the ethanol industry so far has done well this marketing year. We have actually seen record production numbers moving to date. Now, moving ahead, that could be a little bit more challenging. The blenders are the ones that are having the most difficult time right now, as ethanol is actually higher priced than reformulated gasoline. So, now granted, they have a mandate. I mean, there's a certain amount of ethanol that has to be put into the blend, so that keeps a very steady amount of demand out there. Where you could see a greater impact moving in the months ahead is not only a little resistance in producing the ethanol, but because of the strength in the dollar we've seen over the last 4 to 5 months, you've now brought imports of ethanol back to a very competitive stance. So, and in the last year, of course, we were exporting ethanol. Well, that's kind of dried that up, and it is to the point now we're probably going to see a little more import of ethanol. So, it's going to really level off, or at least stem the growth in demand as we move on into the months ahead.
Energy prices, Dan, are obviously a big part of our economy, but there are other things that we need to take into account as well. For example, people's attitudes. We understand consumer confidence is rising, hitting its highest level since 2007. In your mind, is that increase in consumer confidence warranted?
To a large extent, yes. I think people are feeling a little more comfortable in their jobs. We do continue to see the unemployment numbers work down. They're a full percentage point below where they were a year ago at this time. And payrolls are higher. I think as of the October report, the average wage was up about 4% over a year ago. So you add those two combinations together, and they've continued to hear relatively positive news as far as economic growth. As we saw, the revised third quarter GDP was pushed up to 5% last week. So right now, I think as we enter into 2015 here, at least for that first quarter, most people are pretty optimistic about the outlook into the next year. Now, will that necessarily translate into a tremendous amount of new spending? I think people are still a little bit cautious, particularly when it comes to the housing market. And
Chris, the Federal Reserve believes the economy is growing and ended QE2. Yet they declined to raise interest rates during their latest meeting. When they finally decide to raise rates, how might that affect consumers, do you think? Do you think that we'll see inflation
once we do see that interest rate start to creep up, because once it begins, it's probably it's not going to stop right away. I mean, we'll probably see that continue to increase over the years.
Dan, 2 minutes remain in our time with you. I want to get your take on the Federal Reserve and our money supply. We talked earlier about QE2. There's speculation that we're going to see continued quantitative easing, which of course is just a fancy way to say the Fed is going to print more dollars. Against that backdrop, isn't there a real concern that one day we are going to have to deal not with just minor inflation, but with an inflation monster?
Oh, well, I mean, absolutely. The risk has to be there. Historically, we know that's always been the case. You know, one of the saving graces this time around is we have not seen the velocity of money really move back into the system. People have paid down debt, but you know, you reach a certain debt where when you look at the average American right now, debt loads have really become back in line, and much of that maybe came through foreclosures and forfeiting debt. But regardless, they're in a better position, and moving forward, that is going to start generating inflation. And it's going to be somebody's going to have to be on the trigger pretty quickly at the Fed to keep that from getting out of control.
Final 30 seconds, Dan. Bottom line on the economy. You feel good about next year, or are you cautious?
You know, certainly cautious. I feel good at least into the first quarter. I think we move beyond the end of that first quarter, and I think we'll be facing a number of challenges. And we still know that, you know, one of the major obstacles we're going to face one of these days ahead is going to be this continuing rise in the amount of federal debt we have versus our GDP, and someday we're going to have to come to reality with that.
Well, the one thing we can't change is time, and unfortunately we're out of it. Dan Hueber, General Manager of the Hueber Report, we thank you for a personal assessment and report on the economy this past year and where it's headed next year. Thanks so much for your time. And America's Forum continues following this Newsmax Now update.